Good afternoon and welcome to the prelim results presentation for Tristel. We're joined this afternoon by Liz Dixon, FD, and Paul Swinney, CEO, and I'm going to let Liz kick off the presentation.
Thank you, Hannah.
Thank you. Okay, well, once again, we're very happy with the company's results for the year ended 30 June 2016. We'll run through the financial highlights with you. Turnover increased by 12% to 17.1 million. Our half one growth was reported at 8% period on period, and for the second half we saw growth of 15%. So while it was a slightly muted first half, we're very pleased that the second half sales picked up. Overseas sales increased by 22% up to 6.7 million and now represent 39% of total sales. Now, at the interim stage, we reported a share-based payment of £1.1 million, and that was as a result of the grant of 1 million share options to senior staff and management. And those share options were valued using the Black-Scholes model. Now, our auditors at full year have advised us that we need to change that valuation method to the Monte Carlo valuation method, and as a consequence, the share-based payment charge reduced down to £674,000. So the following numbers that we are reporting in these financial highlights are before share-based payments. That was a one-off, it won't be repeated, and we remove it from here so that you can all see the underlying performance of the business. EBITDA then increased by 26% to 4.3 million. And pre-tax profit before share-based payments increased 27% to £3.3 million. Earnings per share up to 6.62 pence per share, that's a 20% increase. And the dividend for the full year increased by 11% up to 6.33 pence. That included our second special dividend of 3 pence per share, which was paid in August 2016. And the final dividend of 2.19 pence per share, which will be paid on the 16th of December to shareholders on the register on the 18th of November, and that's an ex-dividend date of the 17th of November. Net cash in these accounts, 5.7 million end of June, and the company remains debt-free. Of course, since the year end, we have paid that second special dividend. It aggregated to £1.3 million in total, and we also paid out £1.1 million for the acquisition of our Australian distributors business, something that we reported back on the 21st of July, and today our total cash balance is 3.7 million. So that gives you a feel for how the business has performed since year end. Operational highlights. Well, we had 5 overseas subsidiaries during this financial year. We've added a further subsidiary with the acquisition of our Australian business, so it's now 6. And for many years they were a drag on earnings, but it's interesting to note now that all of our operations are now profitable, and we'll talk a little bit more about their performance as we go through the presentation. The direct sales, so sales from our from our own subsidiaries out to end users, account for 2/3 of our overseas sales, and they grew by 30% in the period to 4.1 million. And that compares to the remainder of our overseas sales, which are via a portfolio of overseas distributors, which grew by 13% to 2.6 million. Post year end, as I said, we acquired the business and assets of our Australian distributor Ashmed, and that transaction completed on the 15th of August. It was a total consideration of £1.1 million. That included goodwill and stock and certain fixed assets, the transfer of staff over from a distributor that we've known for many years and has made a very big success of the Australian market for us, but with a single product. Their sales from the distributor out to the end users was £1.5 million during this financial year. So the price we paid was less than 1 time sales for this business, and we of course trade at a multiple of at least 3 times sales. Our business plan to enter the North American infection prevention market is progressing well, and Paul will lead us through an update on where we're up to and which products we're focusing upon as we go through the presentation. A couple of operational items included in here. We completed the rollout of our enterprise resource planning system. It's now in effect group-wide, so we operate from a single platform throughout the world. And by implementing this system, it's helped us with better buying, better manufacturing processes, and has certainly helped with our gross margin improvement, which we'll come to as we go through the presentation. We've also installed semi-automated production lines at our manufacturing facility near Newmarket, and we made an investment of £200,000 during this financial year, which now will result in an increase in capacity, an increase in speed, but also a consistency of product quality, which is something we've been looking for a while. On the next slide, we look at turnover for the financial year. The table shows UK sales at the top and overseas sales in the bottom section. And the first 2 lines of each of those sections, instrument disinfection and critical surface disinfection, they are what we refer to internally as our core products. And these utilise our proprietary chlorine dioxide chemistry, and they're the areas of the business that we invest in and that we focus upon and that we believe future growth can come from. Within those 2 categories, we can see that within the UK we saw 12% growth in instrument disinfection and 7% growth in surface disinfection, and overseas, which is really where the future of this business lies, 27% growth in outpatient instrument disinfection. Surfaces overseas suffered during the year as a result of a packaging issue that we've been working to resolve. We have now improved our manufacturing process by purchasing a new sachet forming machine. It will improve the integrity of the pack and will give us the confidence to really promote our surface products overseas, which is something we've been reluctant to do over the past few years. The other line of our turnover section here, within the UK, this includes non-core chemistries. As I say, they are not chlorine dioxide, not our proprietary chlorine dioxide. They're other active substances. We reported at the halfway point that these products required some form of approval and registration under the BPR legislation, and that's pending. It will come into effect on a rolling basis over the course of the next few years. And so as we see a decline in this area of the business, we have made a decision to have no further investment or promotion of the products, rather switching our limited resource in Newmarket to focusing upon the promotion of our core products. So we've seen a loss of sales, a 20% decline. It's not a surprise to us. We will continue to see a decline in that area. The difficulty is, of course, that it masks progress, particularly within the UK. So while we're seeing growth rates of 7 and 12% in our core products, the reported growth is much lower than that for the UK. Contamination control and animal health care, 2 secondary items to our product portfolio. They're performing relatively well. We imagine there will be ups and downs as we go into the future, but they are for now fairly stable, and but again non-core.
Okay, so thanks, Liz. So here we can look at our historic sales record since we went public in 2005. And you can see that with the exception of 1 year in which we took a slight backward step, we have achieved an uninterrupted record of year-on-year turnover growth. And the compound annual growth rate over the period of 11 years now still stands at 17%. So the business, I think, has track record, and if the past is a prediction of the future, we can see how our Tristel organisation can continue its momentum into the future. And with respect to that, have tried always to be as explicit as is consistent with the AIM rules and the advice and guidance of our advisors to help shareholders and prospective shareholders know what we are expecting the business to do in the years ahead and to be able to model it as such. And in 2014, when we decided that this is the way in which we should communicate with our shareholders, we set a revenue target of growing the top line year on year by 14%, compounding over the 3-year period. We took a 3-year view to 2017, which would take us to sales of £20 million in the year that we are now in. And when we embarked upon this exercise in 2014, our group sales were £13 million. Let's check and see how our progress, and our brokers, both Equity Development and our house broker, FinCap, are both predicting sales of £19.5 million during the year. So we're very close to achieving the goal that we set 3 years ago. Now it's time to look, as our board has in the past month or so, to look out to for another 3-year period, starting this year and ending in 2019. What will the business look like towards the end of this decade? And we're expressing our expectations slightly differently. We're delivering our thoughts as to the future with respect to revenue in terms of a range. At the lower end of the range, growth year on year of 10%. At the higher end of the range, growth year on year of 15%, which in 2019 will create a business that will have sales of between 23 and 26 million compared to the 17 million that we achieved last year, and the 19.5 million or more, I hope, that we're expected to achieve this year in the year ending June 2017. Now, this slide helps us see the dynamics within our international business. And international sales, which accounted for 39% of total group sales in the year and 42% in the second half. So you can see the direction of travel of international growth. How does it break down rather? Germany, Australia, China, New Zealand, Hong Kong and Russia, these are the countries in which we have direct operations. These are our people selling to hospitals, for the most part, in local currency and working within those national markets. Germany, the largest contributor to group sales in the year, is actually a hub that we ran out of Berlin with a team of 12 people, selling to Germany, Austria, Switzerland and now Poland. And it's charged with a mandate of developing Tristel's business within Central Europe. Fantastic growth during the year, 42% up, a very competent team. And the next largest contributor during the year was Australia, to whom we sold £750,000 worth of product. But as Liz mentioned earlier, their sales to the end users in the hospitals in Australia was in fact £1.5 million. And they were selling one product during the year, our Tristel wipe system, which during since 2011 when we started business in Australia, is the only product for which we have TGA, Australia's equivalent of the FDA, approval for. So it's a single product company selling into two parts of the hospital, which is ultrasound and ear, nose and throat, with some involvement perhaps in cardiology, achieving £1.5 million of sales, a team of 5-6 people, and have been very successful. Now in the year we're in now, with the acquisition completing in mid-August, that will make an immediate impact upon sales, group sales, and of course sales within Australia during the year. China, very pleased with progress there, although in the context of the country, it's still, it's very small in terms of the potential that can be realised over time. But a great contribution, terrific growth, focusing upon one product, which is Stella, rather than the broad range of chlorine dioxide products, which is our staple here in the United Kingdom and throughout Europe, but great progress. New Zealand, I have to mention them because they punch so far above their weight. A population of 4 million people, I think our team of 4 people in New Zealand do spectacularly well on a sales per capita basis and a sales per employee basis for sure. Hong Kong, we took a little bit of a step back during the year because of this packaging integrity issue. The sachets that we describe as Fuse were degrading on their journey from here, from our factory in Newmarket to Hong Kong, and we have resolved that problem, and we can look forward to Hong Kong driving sales forward this year. And Russia, we should mention it because we have a presence there. We didn't give up on our team. It's now down to one and a half people in terms of headcount, but we've stayed with the country. It's been a great healthcare market for lots of UK manufacturers. Smith & Nephew comes to mind in years past. It's had its troubles over the course of the last 2 or 3 years, but I'm very glad that we have persevered and stayed in Russia with a direct presence for the longer term. So in aggregate, all of those operations with our own people, speaking the Tristel story directly, aggregated £4.1 million in sales. The other model, and I'll just emphasise there, they're selling into their own national markets in the national markets currency, because we're going to spend some time to talk about the effects of Brexit and the currency position that the company confronts. Now, the distributors, of which we have 35 in 35 countries, we sell to them in pounds, and their sales growth has been slower, as one might expect, than our own operations, because these are classic distributors models, business models. They carry more than one product. They don't just focus upon Tristel, they focus upon the other lines from other manufacturers that they have within their own portfolio. So it's no surprise that they grow at a slower rate than our own direct teams. But still great growth at 13%, and I think that's very sustainable, and we can look at that very predictably as continuing over the course of the next few years. So in total, £6.7 million of overseas sales, and a few highlights at the bottom. Going into new markets geographically and within markets in which we have already established a presence, growth is all about gaining approvals. Of course, it's about selling to hospitals more and more product, but the gatekeeping event is to get an approval for our products. And during the year, we got approval for 25 products in 7 countries. The significance of that, I think, in the global context, is that we have never not got an approval that we set out to achieve. It takes a big investment on the part of our company, and we spent £340,000 on these approvals programs. Now, that's not our cost, our people cost, it's third-party cost in terms of testing and fees and studies, and we spent that across a very wide range of countries, 22 in total. And it's a very cerebral activity. We doubled the number of people that we employ who are engaged in it, and we now have 6 people full-time focusing upon the regulatory processes that all countries worldwide demand of medical products. I have to say that if approvals are the lifeblood of the company and the source of future growth, we unquestionably have the strongest ever pipeline of approvals in process than we ever had in a corporate history. A look at the UK, by far the most mature market around the world. We've been here longest, and this is where we're based. And when we say universal coverage, what we mean is that we sell to every hospital within the country. And in certain clinical areas that we target with our instrument disinfectants, for example, the ear, nose and throat department in the hospital, the cardiology department, the ultrasound departments, because ultrasound equipment is found in many parts of the hospital, but including obstetrics and gynecology, women's health, one of the main users of ultrasound probes. We have very high market shares being measured by how many outpatient ear, nose and throat departments in our 400 NHS hospitals are using our products, where the percentage is extraordinarily high, it's over 90%. In cardiology, the same kind of percentage. In ultrasound, we have about 50% of all the departmental areas in all of these hospitals that are using our disinfectants to disinfect their ultrasound probes. But A hospital is a multifaceted and complex organisation. Addenbrooke's our local major hospital in Cambridge. We might count Addenbrooke's as one customer, but within Addenbrooke's we might be used in 30, 35 departments. And there were always more departments that are adopting the use of the most modern imaging and diagnostic technologies, and they become prospective customers within a major modern hospital. There are alternative methodologies that are used to decontaminate and disinfect, and we substitute for them. So there's growth available to us through taking out or taking over the use of an alternative product. There is a constant stream of new medical devices that are designed and devised by equipment manufacturers and sold into hospitals, and they all need to be decontaminated and are a source of new account opportunities. And finally, there are always new clinics open, and a feature of healthcare in the UK, and it's important to remind ourselves of the fact that all of our disinfectants with respect to instruments are used to disinfect diagnostic instruments, not surgical instruments, so we have very little involvement with the operating theatre. Hospitals are trying to get out into the community and outside of the main hospital in each and every conurbation diagnostic procedures. So the government is encouraging GP surgeries to upscale, group together, form polyclinics where simple diagnostic procedures can be undertaken. And the reimbursement rates make it economically very viable for GPs. They've got the skill set. Most of them might well practice in their local district general or general hospital, and they double up to do work in the community. They can buy the instruments, they can make it worthwhile for them from a financial perspective. The hurdle that has to be overcome is how to disinfect the instruments in a way that will satisfy the local infection prevention officer that's given the task of managing infection prevention standards throughout the whole trust. And what we are able to do, because we're manual processes that are easy to deploy, immediately available to the user to use, with training, but requiring no capital investment, no plumbing, no electrics, no knocking down walls or rebuilding countertops. Our products can be immediately rolled and deployed, and we achieve the highest standard that can be achieved even if you were to buy capital equipment. So we become an enabler for a strategic trend which is being encouraged by the Department of Health. All of this is what we do, and it gives us confidence to be able to predict our revenue growth will be between 10 and 15%. But there are lots of breakout opportunities as well. Our ambition, of course, is to grow at a faster rate than we're indicating. We can be very confident of achieving. And we have new products that they're not new to market, they've actually been in market for a number of years in certain instances. But our experience over 20 years is that it can take quite a while before a new product gains traction and can start to make a real impact and move the dial on the sales numbers. But we're pretty confident that that's within grasp.
Okay, so if we have a look at the profitability of the business, overheads and margins, then we can see that during 2015-16 we achieved an increase in gross margin up from 70% to 73%, and that came as a result of better buying, helped by our new ERP system, and also some manufacturing efficiencies. That said, the weakening pound means that we will be getting an increase from our overseas suppliers of componentry into the UK, into our manufacturing facility into the UK, and as a consequence our analysts are predicting that our gross margin will fall. So within equity development and FinCap's notes, if you have sight of those two, you'll see that we are being forecast to achieve gross margins of between 70 and 71% going forwards, and that's the reason behind the fall. Admin expenses increased by 14% during the period. Two key drivers of that increase. The first was down to regulatory costs. As Paul mentioned, we spent £340,000 on gaining regulatory approvals during the year, part of that related to the United States, 130,000 of it, but the balance was to do with, as Paul said, testing and external work on preparing dossiers for approvals in other countries. The second part of that increase related to a staff performance bonus scheme. The business performed better than we had originally expected, and as a consequence there was a bonus payout which was physically paid post-year end, hence the increase in creditors, and that bonus scheme paid to all members of staff across the group. Pre-tax profit increased by 27%, up to 3.3 million in the period, and our pre-tax profit margin came in at 19%, an increase of 2 percentage points up from the previous year. And of course, you may well recall that the second of our two financial strategic goals that we set in 2013 was to achieve at least a 15% pre-tax margin. Well, we have obviously achieved that, but looking forward, as we set our new target for the next 3 years, we don't expect to be able to maintain the 19% that we achieved in the year we're reporting upon, because we have got both the pricing pressure coming in from our overseas suppliers, but also we are continuing to make significant investments in our regulatory program, including with the United States, which will ramp up over the coming years. So we're setting ourselves the target of no less than a 17.5% pre-tax profit margin. Still a good number, but just a drop down from where we are presently. Impact of Brexit and currency risk. We've included a slide in the table here because it's a hot topic and everyone wants to understand what currency means to Tristel, to the business. So the impact on these numbers is that at the balance sheet date, the translation of balance sheet numbers has created a currency gain. Effectively, this relates to Australian dollars, which we stockpiled over the course of the spring into June and July in preparation for what we hoped would be a successful acquisition of our Australian distributors business. And the drop in the pound over the course of the last few days of June resulted in a gain coming through of £117,000. There are also other movements of foreign exchange. Translation of overseas subsidiary profits came in at a gain again of 23,000, and open trade balances of 11,000. So all in all, we made £150,000 of foreign exchange gains during the period. The impact on the new financial year of the weakening pound, of course, as we've said, is that our prices have gone up. But the good news is that we've budgeted internally with FX rates of 1.2 for the euro, we're currently sitting at about 1.1, and 1.75 for the Australian dollar, and we're currently sitting at 1.6. So we've set up for ourselves a relatively positive tailwind as we go into the new financial year. Exposure to foreign currency movements in the year at the bottom of the slide, we just show that non-GBP sales, so sales from our overseas subsidiaries into the market, recorded at 1.115 million in the year. If we were to look at those sales in constant currency terms, then rather than the 30% growth that we've reported, it would have been 34%. So it gives you a slightly better feel for the progress that our subsidiaries are making.
I think, and the reason for that is, although after the 23rd of June the currency plummeted, through the course of the year, the currency was actually strengthening against those currencies that we principally trade in.
Yeah, absolutely.
So North America, a year ago when we informed our shareholders that we were embarking upon the initiative of entering North America, I would have said United States. And when we first spoke about our plans, we talked of only 2 products, and we talked of the FDA. Well, during the course of the past 12 months, we've made great progress with respect to those 2 products, but through involving ourselves in the US business opportunity, looking further afield at Canada too, engaging with our consultants and considering the opportunities that we have across a broader range of Tristel products to include surfaces and water disinfection, where we are today, a year on, is in a position to talk about a business plan for North America and not just an approval program for one or two products. So that's what I hope this slide captures. We're engaged with the FDA. We met with the FDA in Washington in April. We're engaged with the EPA for our surface disinfectants and our water disinfectants. And our team goes out to Washington next week to have the same kind of conversation as we did with the FDA earlier in the year. And we've met with Canada's Health Protection Board. The purpose of those meetings is to find agreement upon the test methodologies and the protocols that will be used by us to generate data, so that when we finally do submit that data, it's in a form and the science is recognizable to the agencies to help smooth through the passage of their review and approval. And all of this adds up to, I think, a dramatic sort of step change in many respects for us in our view of North America, which is that we can talk of a business plan, and we can, and we are, explicitly saying now that we will be generating revenues in North America in the financial year that commences the 1st of July 2018 and ends at this time, or in June 2019. So we can be quite certain that we will be selling product into North America at least by then, and certainly during that year. It's taken a substantial investment to get to this point. In the year that we're reporting upon, we spent £130,000 with external consultants and labs and various different bodies. It now ramps up, and we've got budgeted in 2016-17 £500,000 of expenditure on science, and in 2017-18 we predict it will start to decline because much of the work will have been done. But in 2017-18, although it's not shown on the slide here, we will start to make an investment in mobilizing ourselves in North America. I'll talk about our intended business model shortly, but we're not going to be able to execute it without hiring people in the States and locating people in the States and traveling to the States and incurring costs. And the brokers have written into their forecasts in 2017-18 a spend of £500,000, correct me if I'm wrong. So the narrative has changed since a year ago, and although it's not shown in the slide and may or may not be included as a footnote in the brokers' reviews, it is within our RNS. We are now in a position to be able to indicate to you what the size of the opportunity is as well. And you'll find that buried within my section of our RNS report. We've used the same methodology that we would use in the UK, that we've used in Germany, France and elsewhere, to size the two products which will be used to disinfect medical devices, which is Duo for ophthalmology and Duo for ultrasound. And the use of those products is driven by the number of procedures on patients that are undertaken with the instruments which our disinfectants are intended to disinfect. And you can always find out in any healthcare system, certainly a developed and sophisticated one, how many glaucoma procedures are undertaken or how many intravaginal procedures are undertaken. That data is locatable on government websites. So it's a reliable source of very precise data. And the number of those procedures drives the number of uses of our products. We make some assumptions about what our selling prices will be, what end user prices will be, what the margins we'll have to share with our distribution partners. But what that all amounts to is us being able to estimate the annual sales opportunity into ophthalmology in North America rather, at £8 million, and into ultrasound at £10 million. And it's a well-rehearsed piece of research because we've done it elsewhere. So and we're not saying at this juncture how much of that we will win or in what kind of time frame, but we are now able to at least indicate what the size of the opportunity is. they aggregate £18 million, and our sales in the rest of the world in the year to June were £17 million. So I hope it gives you a sense of what it might mean for Tristel if we were to imagine the company in 5 years from now. We haven't, because it's a more complex piece of analysis, yet put a value to the surfaces disinfection opportunity in the States, but we have every intention over the course, certainly in the next year, maybe we'll be able to be more precise at the half-year point to be able to give you an indication too of what that might look like in the surface disinfection area. So a lot of progress. We're proceeding and progressing successfully on a broad front, and that gives us the confidence, a very clear full statement that I just have as to what we can expect from North America. Now, in the next slide, we've wanted to address something that I think is very fundamentally important for all shareholders, prospective shareholders, and that's to work our way through what are the company's defensive strengths. We are still unique worldwide in using chlorine dioxide as the disinfecting agent for medical instruments. 15 years on from us going to market, we still hold that unique position, and it's worth understanding why that might be and understanding how that might be protected. The why is because the chemistry, anyone who's ever seen us demonstrate the use of the products will understand that it requires mixing an addition of two chemical compounds together at point and time of use. So it's not like using bleach or using Dettol as you might do in the home, which is the active ingredient is called quaternary ammonium compound. It's more complicated. It requires some ingenuity in packaging and delivery. I think that has put other companies off from working with chlorine dioxide, at least to date. And we have also been very different from our peers in the philosophy that we've adopted with respect to disinfecting medical instruments. The received wisdom worldwide is that automation, a mechanized process, is the only thing that can be reliable. You cannot trust a nurse to do a job properly. That's a complete anathema to us. And we took the completely different approach, 180 degrees different direction we've taken, which is to provide nurse staff with the means to safely disinfect medical instruments themselves, which means that it can be done in the patient procedure room. It can be done, has to be done quickly, and it is such a very different way of approaching the decontamination challenge that I think we stand apart from all our competitor peer group as a consequence of that difference in philosophy. But as a consequence of that, one of the greatest defensive strengths we have in terms of being ousted by the alternative is that we don't involve capital. We don't involve a capital purchase. We don't need to plumb in or wire up a machine. It requires our products require no maintenance. They do not involve the decision maker in having to coordinate building services and facilities management to try to get the equipment in on site all at the same time. We could set up a clinic in this room this afternoon and we could be processing, we could be seeing patients if we had the doctor here to be scoped to look at problems they may have with their sinuses. And I could be standing here and disinfecting the instruments for the doctor. It's that deployable. Because no one else has followed our path, we've been given the space in which to create a lot of IP in terms of patents. We have 5 product families or patent families, and at the end of June we have 156 or had 156 granted patents, and we have many hundreds that are in the application phase. So we've been able to create a body of legal IP around what we do and the ways in which we've ingeniously, in some respects, found ways in which to do it. But very importantly, the sort of softer side of it is that this we've been able to create, and it's taken a long time, published science. You may have seen that last week we had an RNS Reach, which announced the publication in the Journal of Laryngology, a study that was undertaken, I think it was actually in 2012, 11-12. It was finished in 11-12, only got published last week online. It can take that long for science to get published, and it's the 25th published peer-reviewed scientific paper that has emerged that relates to Tristel and our chlorine dioxide chemistry. And it would take any company in the world an enormous, well, it was just passage of time to do it, to recreate what we have done over the course of the last 15 years. It's not only published scientific papers, but there are case studies, not our case studies penned by ourselves, but penned by hospitals, health boards in different countries, looking at not necessarily the science, but more socioeconomic type studies, productivity studies that all relate to the use of Tristel products and speak to the merits and benefits of our products. And very importantly, we're now included in 12 professional body guidelines around the world. You can get regulatory approval, that means you can sell. You can appoint a distributor or set up your own people in the country, that means you can get to market. But you approach an ENT doctor with something that's eminently sensible, far better than he's doing at the moment, and he'll say, is it approved by the ENT body of surgeons? Is it approved by the UK Society of Cardiologists? And if it's not, it becomes a big hindrance to gain adoption. Guidelines that get published by these professional bodies are only updated when there's something to update them with. And we are something new that has emerged on the infection prevention scene over the course of the last 15 years, and gradually through tremendous perseverance and patience, we found that these professional bodies have recognised the merits of our products and updated their guidelines to include us. They never include Tristel by reference to our product name because it would be endorsement, but they speak about chlorine dioxide as being an acceptable biocidal agent to be used on an ultrasound probe. Well, since we're the only company in the world that works with chlorine dioxide, we're synonymous with chlorine dioxide. So we've got some tremendous strengths that we will seek to build the business upon. And then if we just flip over, I'll come back to the manufacturers. There are risks, of course. The received wisdom is that you should use automation and not a manual process. I think that as the years roll by and we become more and more embedded in healthcare systems, that we can't be undone, we can't be unwound, because the capital costs that would have to be borne our NHS in this country, if they were to dictate to hospitals that they go to automation, would just be so immense. It's just unthinkable. Of course, a company could adopt or look to mimic what we've done with a chlorine dioxide product with similar features, but they can't trade off of our science, they can't trade off and read across from Tristel to their product with respect to guidelines, because there are always differences. And finally, this third point, which is very important, we have in the past encountered situations where a medical device manufacturer, just because they don't know of Tristel, would respond to an inquiry as to whether it can be used on their instruments with a no, mainly out of ignorance. But with the passage of time and over the years, we've worked very hard to engage with all of the device manufacturers worldwide and to get compatibility. We work very closely with them. So I think this third strategic risk is something that has receded probably completely from the business scenarios that we're laying out. So all of that, I think, is the prelude to the investment case for Tristel.
Mm-hmm. So just looking at some key numbers from investor perspective. Dividend, we've paid 2 special dividends over the course of the last 2 years. They've given a huge boost to our return to shareholders. I don't know how many special dividends it takes to pay out before they stop being special, but we will maintain our current dividend policy. which is to pay out a standard dividend based upon 2 times cover, and then leaving us with the flexibility to pay a special dividend if we feel we have excess cash to our operational and investment needs, which presently we value at about £3 million as a baseline. And that will give us the opportunity to possibly pay special dividends in the future, or alternatively to make further acquisitions along the lines of the one that we made in the current financial year. We certainly won't be looking to make any acquisitions in terms of bolt-ons, different technologies, different activities, but bringing on within the Tristel family a presently operating distributor who focuses upon Tristel products could possibly happen again in the future. So adjusted PBT, we've seen growth in this financial year of 27%. Profit increases translates into earnings per share increase, and what we've seen is that the share price has reacted to that, and we've seen share price increase as well. So what you see on this slide is what we very much believe you will continue to see as the years go by. So summary and outlook, everything that we've covered, it's been a good year, further growth, robust margins. Expansion is where we will get our future growth from. That we have very strong IP, we have strong defensive strengths, and we have a strong balance sheet, cash of £5.7 million and no debt. Dividend increasing, and we expect further sustainable growth as we go into the future. Thank you.
Well, thank you both. It was a very comprehensive explanation of your prelims. We have a few questions already come through. If anyone would like to ask any more, you can use the Citrix webinar platform, which you can find at the top right-hand corner of your screen. But if we begin with the questions that we've had already, we've got one from Tom asking, Liz, you've said already that you're not going to have any more share-based payments impacting the revenue numbers. Are there no more directors' share schemes still live which might impact future numbers?
The only share scheme where the options have not vested relate to change of control options. So, to my knowledge, there's certainly nothing more due to in the pipeline to be granted. We do have a staff share option scheme which delivers 10,000 share options to every member of staff, everybody from warehousemen right up to senior management, every 3 years up until they've been with the company for 7 years. And so they will gain a total of 30,000 share options, every single individual in the company, but beyond that there are no plans for any additional share options.
Okay, thank you. Another one from Felicity. Do the future sales projections specified by Paul in the equity development note include or exclude potential acquisitions?
They exclude, they take no account of future potential acquisitions, and I may as well say here right now, they also exclude any contribution from North America.
Thank you, Paul. Next one is from John asking, why are there no North American revenues in the financial years? Why does it only start in 2018?
Well, it's a prediction that we will start in 18-19. We hope that we may do so before then, but that's what we can speak to with certainty. And the reason is that the regulatory process is underway, but it does take the time that we're predicting it will take. So it hasn't come to an end, it is midway.
Thank you. Germany and China are obviously the two strongest contributors from your overseas direct sales. Can you tell us what your ambitions are for those two regions in terms of their forward future projected growth, and whether that's going to take much additional investment?
Well, let's start with Germany. In Germany we have 12 employees. Yes. We have 12 employees, so a fully fledged management and sales and administrative team, and it doesn't take too much imagination to see the German market, which is Germany, Switzerland, Austria and Poland, being at least as large, although not having a manufacturing facility, but at least as large in terms of sales and people infrastructure as the UK is. Those four combined economies have far more hospitals than the United Kingdom does. They sell the full range of Tristel core chlorine dioxide products. And the progress that they've made, I think, only actually reflects the fact that the German market or that particular geography is so much larger than the UK. With respect to China, actually we're going to slip in Australia there, because from the chart it shows £750,000 of sales. Well, it would have been 1.5 million if we'd have had the distributorship working directly as our own operation during the year. I think you're going to see a lot of growth out of Australia, if for no other reason that during the year that we're reporting upon, they only had one product to sell, being our wipe system. Shortly after the acquisition was consummated, we got approval for our surfaces products, which we've been waiting for 2 years. It was just very fortuitous it came after the acquisition and the vendor's decision to sell and not before it. We may have had to pay more, but that's the bit of luck that you have every so often. So I think you're going to see a lot of growth in Australia. And then China, the opportunity is enormous. But we're focused, it's a very difficult and unpredictable market. I've seen lots of infection prevention or healthcare companies throw enormous resource at it and not succeeded in turning a profit. We have got more than £500,000 of sales in the year reporting upon, and it was profitable. I think that's a fine achievement. I think one goes slowly in China.
Wonderful. Well, in the interests of time, we'll make this the last question from Bill. But just around your gross margin, obviously you spoke to the fact that they would drop back a little bit to the 70-71% mark. Do you see, as these other territories begin to take off further, that can build back up again thanks to exchange rate mechanisms as well?
Yes, I think there's every possibility. I mean, we'll see what the exchange rate movements do over the course of the next few years. And of course we're facing pressure from our input prices, our componentry prices, and there are places in which we can put the pressure back. So certainly from our distributors' perspective, they have had a positive impact of the weakening pound over the course of the last 3 or 4 months. Their businesses will have been doing very well out of Tristel, so we're suffering, they're gaining. That balance needs to be addressed, and as we go forward, then that will be the approach that we take, that there will be opportunities to increase our prices to readdress the balance.
Wonderful. Well, thank you both again for coming in today, and good luck for the next 6 months.
Thanks a lot, Hannah.
Thank you very much.
Thank you.